Federal Reserve Chairman Jerome Powell announced that it has decided to maintain interest rates in a range of 5.25% to 5.50%, since inflation is too high and the path forward is uncertain. Are we out of the woods yet? What to expect from the US economy in 2024? These decisions are going to affect investors the most. So here are all the takeaways from the Fed conference and everything investors need to know regarding their decision. The Federal Reserve is projecting interest rate cuts next year as inflation continues to decline. The US Federal Reserve announced its interest rate decision after a two-day Federal Open Market Committee meeting, leaving the benchmark interest rates unchanged at 5.25% to 5.50% for the third straight meeting, in line with street estimates. The Fed's decision to keep its key lending rate between the current level lets policymakers determine the extent of any additional policy firming that may be appropriate, the US Central Bank said in a statement. The Fed added that inflation has eased over the past year but remains elevated and would watch the economy to see if any additional rate hikes are needed. However, the Fed's policymakers also signaled the end of policy tightening and said that they envision 3 interest rate cuts in 2024. A near unanimous 17 of 19 Fed officials projected that the policy rate will be lower by the end of 2024 than it is now, with the median projection showing it falling 0.75 of a percentage point from the current range. The rate-setting panel cut the median projection for interest rates at the end of next year to the midpoint between 4.5 and 4.75. Signaling they now expect 0.75 percentage points or 75 basis points of cuts from the current levels next year. At 25 basis points per cut, it would translate to 3 rate cuts in 2024. Federal Reserve Chairman Jerome Powell discussed why the central bank held its benchmark federal funds rate steady again during a press conference following the Fed's latest policy meeting. Powell said officials would continue to proceed carefully and make decisions meeting by meeting as they aim to keep policy sufficiently restrictive to bring inflation down to the central bank's 2% target. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people, Powell said. The dollar sank more than 1% against half of its group of 10 peers after the Federal Reserve left its benchmark interest rate unchanged. The yen strengthened as much as 142.88 per dollar, on track for its strongest close since early August. The Treasury market rallied and swaps traders dialed up bets on interest rate cuts after the Federal Reserve surprised investors with a more aggressive forecast for monetary easing next year. Yields tumbled, with the policy-sensitive 2-year note plunging more than 30 basis points to 4.43%. The yield on the 10-year note fell more than 19 basis points to 4.01%, and the 5-year note's yield fell below 4%, becoming the first Treasury security to pay a rate that low since August. He warned the US economy could still make an unexpected return into recession despite its resilience in 2023. There's little basis for thinking that the economy is in a recession now. I think there's always a probability that there will be a recession in the next year. It's a meaningful probability no matter what the economy is doing. So it's always a real possibility, Powell said. Powell came close to declaring rate hikes over, although he refused to completely shut the door on more increases. The Dow Jones Industrial Average hit its first record high since January 2022 on Wednesday after the Federal Reserve signaled lower borrowing costs are coming in 2024. The Dow was up 1.12% at 36,986.89 points. Ending the session at its current level would also mark the Dow's first record high since January 2022 and would confirm that it has been in a bull market since tumbling more than 20% through its closing low in September 2022, according to a common definition. Besides, the US central bank is expected to remain hawkish as inflation remains above its 2% target. In its previous meeting on November 1st, Powell-led Federal Open Market Committee held interest rates steady at a 22-year high for the second time in a row, even as the US economy remains resilient despite high interest rates while inflation still remains above the Fed's 2% target level. Policymakers lowered their forecast for economic growth slightly for next year while keeping unemployment projections unchanged. The unemployment rate is seen rising from the current 3.7% to 4.1%, the same rate projected in September. In its quarterly projections, the Fed's policymakers now expect core inflation, according to its preferred measure, to fall to just 2.4% by the end of 2024, down from a 2.6% forecast in September. Core inflation, which excludes volatile food and energy costs, is considered a better gauge of inflation's future path. US stocks surged and benchmark Treasury yields slipped to their lowest level since August after the Federal Reserve flagged the end of its tightening cycle and struck a dovish tone for the year ahead. Powell said, "People generally think that we are at or near that, and I think it's not likely that we will hike, although we don't take that possibility off the table." Policymakers at the US Federal Reserve are considering when it will be appropriate to begin cutting interest rates, Fed Chair Jerome Powell said on Wednesday. The question of when it will become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion now in the world and also a discussion for us at our meeting today, Powell told a press conference. The newest projections also showed policymakers see the risks to inflation and employment, the two planks of the Fed's dual mandate, were coming into better balance. For an institution that has been reluctant to declare victory over inflation that spiked last year to a 40-year high, the updated projections and new statement mark a notable shift in tone and outlook. According to Powell, the central bank sees the US economy losing steam in the final months of the year. Recent indicators suggest that growth in economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, said Powell in the press conference. The US Federal Reserve does not want to take the possibility of a further interest rate hike off the table, said the central bank's chair, Jerome Powell. "We are prepared to tighten policy further if appropriate," he told a press conference after the Fed announced it would hold rates steady to fight inflation. Gold prices rose more than 1% after the US Federal Reserve flagged an end to its interest rate hike cycle and indicated possible rate cuts next year. Spot gold gained 1.3% to $2,004.79 per ounce. US gold futures settled 0.2% higher at $1,997.30. Inflation has eased over the past year, but remains over our longer-run goal of 2%, Chair Jerome Powell said at a news conference after the Fed's 19-member policy committee ended its latest meeting. In a statement issued, the Fed hinted that its rate cut efforts may be over, saying it is considering whether any additional hikes are needed. The US dollar dropped against the euro and yen on Wednesday after the Federal Reserve signaled in new economic projections that the historic tightening of US monetary policy engineered over the last 2 years is at an end and lower borrowing costs are coming in 2024. No officials see rates higher by the end of next year. In a new policy statement, the US central bank officials took explicit account of the fact that inflation has eased over the past year, and said it would watch the economy to see if any additional rate hikes are needed, implying directly that after months of aggressive tightening and a bias towards moving rates higher, they may not need to raise them again. US Treasury yields dropped as of now after the Federal Reserve held interest rates steady as expected, but flagged in its new economic projections that its tightening policy is ending and rate cuts are on the horizon next year. So that's it. What do you think about the current situation? Any hope left for the upcoming FOMC meeting? Comment your thoughts, do like the video and stay tuned to our channel by subscribing for more. See you soon.